Okay, how's that?
That's a good, mate. That's a good.
How are you doing, mate? All right?
I'm going. Only four. I'm going well.
Yeah?
Mate, another great trade of yours. Awesome. Good stuff.
Yes. Yeah, really happy with that, mate. Really, really happy with it. It worked out very well in the end. Now I think there's going to be a
I like the
bounce.
way that came back and retested Daily Pivot yesterday. Where was I when that was happening?
Yeah, really, it was interesting, wasn't it? And I have to say, I was kicking myself a little bit because there was an opportunity to play this bounce, keeping the short in the market, but there was an opportunity to play this bounce. And I just wasn't quick enough. I saw it happening. But I suppose my bias was so far, looking to the downside that I allowed myself to ignore it. And my other thing was that I was going to play a bounce, but I was going to play a bounce down here.
Off there. Yep.
Yeah, but it bounced a lot earlier, and I couldn't find why it bounced there. But technically, I didn't know why the price kind of held, but it did, and it bounced there. Now, what I did do was play a little bounce here, and when it started to come up here and weaken, I took the trade off. So I made a tiny bit on that little bounce, but it continued to fall to the downside. I've cleared out the shorts, and I'm looking for a little bit of a long bounce now. To the upside. Now, I did say that we should be holding these shorts right to the downside, and that was really for those people that don't trade the FTSE. I think you can take advantage of this because, taking trades off the table and waiting for a break and retest of it, you can still get the same price. So I'm quite happy to try and play some of these swings. And I think we might be in a swing area. It may, the breakdown of this particular pattern doesn't bode well. And I appreciate that, but I don't think this is a bear flag. I think it's more of of this triangle pattern breaking down. So that may well see us down to these lows again. So we can look out for that, and I might well take a little short just into this area, but I won't be holding on too much longer than that, probably because I just think that when I look at the wider picture of this. Now, there's two reasons that I'm anticipating a bounce here. The first thing is the wider picture, and the wider picture is for this to happen. Now, you could draw this line. What I like about this line is you can draw it in either area. You can draw it here from the top, or you can draw it from here. Maybe it's better from there. It's a little bit cleaner, but it certainly looks to me like a bounce. And it did actually resist that area yesterday, or the area was supported right towards the end of trade. So I'm looking for this area to hold. We might
action there too, mate.
What's that, buddy?
There's a bit of horizontal action there as well, by the look of it.
Yeah, it does look like that, doesn't it? Yeah, it does. When you sort of like look over here, in actual fact, it looks like that's a bit cleaner. We've got one there, suspect there, but it does look like there's some. I agree with you, some horizontal action. So I am looking for a hold here. Maybe a little dip lower this morning, but then start to move back to the upside. The question is, because of the strength of this, I mean, this is an amazing candle, really. Taking out certainly the open and close prices of the last two, and well into the third one as well when it comes down to price action. So it could just continue to drop and fall from this particular zone. And bring us down to that area there, or ultimately we're looking for this low down here. But what I'd quite like to do is, and now this isn't easy, and I don't profess to be so skilled at this that I can pick the exact turning points, but what would be a really good methodology to try and squeeze as much as we can out of this move, because I do believe it's going down here ultimately, is to see if we can play a bounce, short again, take profit, play a bounce, short again, take profit, play a bounce of some sort, and short again. So I'm trying to play the zigzags. Now that might mean that we miss out on some pips, because if this breaks down, then of course I'm just going to jump in at the low. But I don't want to do that. I want to see if I can get in again as it comes forward. But all the way down, I'm effectively all the way through. I'm effectively attempting to play the zigzag, take a trade, comes down, take profit, comes up, take a trade, comes down. That's what I'm trying to do. Take profit again, and then if there's any sort of bounce, then we'll see what happens at the low. Whether we try and get in a long down here, and maybe a protective short or something, just to see which direction the market's going to go in. But that would be the plan. Just try and sort of keep going in and out. Now, of course, you can add instead. You can keep the original trade on and add instead, but it does mean that you end up not necessarily being able to play the greater aspect of it. You're not able to kind of like take all the profits as it comes down. So we are early doors. We've just opened up the market, and we are seeing.
You're not long now, are you?
I am long. I am long.
You are now, right?
Yes,
okay.
I am long, but I'm only going to get long until, and I might need to hand it over to you in a moment, just to kind of focus a little bit. But I'm only going to get long until around about the daily pivot if I can, and then I'm going to clear out and then see what I can establish. Now the thing with it is that I don't see why we would break down just yet. And I suppose that's the reason that I've decided to switch positions here. It may break down, and if it does, it's no big deal, because I do see us coming back to the point eventually, because of other data which is due this week. So I've just got to see what happens early doors here. But I'm just not anticipating a really big crash to the downside. Now, this hasn't opened up particularly positively, but that's it's not a huge issue at this stage. So if this can hold here, then I'm going to be aiming for these pivots here. And when I aim for these pivots, I'm looking to see if I can get in short again here. It's a bit of a risky strategy, there's no doubt about it. It does mean sort of like a lot more work, but I spend enough time in front of the charts to be able to manage it if things go against me.
And there's money. Three amigos there, mate. Wow.
What's that? The three amigos?
Yeah.
Where are these? Pivots. Oh, yeah, good points. Yeah, I mean, if you need somewhere where there's going to be some resistance, you don't have to look much further than that, do you? So
but also as a magnet to price as well.
Yeah, I would have thought so. That's a really good point. So I would have thought price. I mean, it was interesting yesterday because price did bounce off the monthly pivot, but it very quickly disrespected that particular area, and the monthly and the weekly pivot were actually in the same area. So which is why I initially took a long here. Because it looked like if it was going to bounce again and give me one more opportunity to go short, it would be there. But it didn't. It didn't respect the price. And to be fair, I left the shorts in the table and I took the shorts off down in this pattern. So it's not a huge issue at this stage. Now with price coming down right now, it could collapse. So we might have to do some management. But I'm okay for right now. The thing is, there's money in the bank. So I don't need to worry too much at this stage what this early price action kind of suggests, because I can hop in with some fairly comfortably without too many issues here. So
nice place to be, mate. Well done.
Yes, yeah, thanks, buddy. We're back to the lows here. Now, if we look along here to the 4-hour chart, we can also see that there is some support from some previous price action here. So if it does start to break down, then we're probably aiming down here. So we should be okay to kind of collapse things down. But let's see if price can hold up for these first 5 to 15 minutes. And if not, let's hop into another short and see what happens. Decent 4-hour bar as well, by the way. This inside bar is okay, to kind of suggest that there could well be a bounce here. So I'm looking for a bounce. It may not come, but that's what I am currently playing. I'm currently playing that the fact that there's going to be a bit of a bounce here, and I like the fact that that you spotted those three amigos, because to be fair, I hadn't. I hadn't even considered the fact that they were all stacked up on top of each other. And that's why we have trading buddies. There's somebody else to kind of like see it from a different perspective. But yeah, the fact that you've noted that suggests that if this is to bounce, then that probably will be done. I would have thought at that point. So let's see if we hold. Now the news of the day is ADP non-farm employment change. Pretty important number, as you can see. Crude oil inventories will affect WTI, but this is the big headline of the day. So if price collapses before this particular data release, then we can trade it right up to that, I would have thought. And then we can look to see if the reverse is going to happen later. But I am expecting a bounce of some sort today. Now, if price does collapse here, let's look for the bounce a little bit lower. Let's look for the bounce from here. That looks like another really good line. That's at 72.41. So price collapsing here means I am going to take the short. So I'm just going to get prepared for that, mate. If you don't mind me passing over to you.
No, not at all. I'll pinch the screen, and actually, when you come back, let me know, because I've got a couple of things I want to ask you about the pound.
Okay, great.
Speaking of which, I did place an order earlier today on Euro pound, not pound Kiwi. And pardon me, we've got, to my mind, as good a technical scenario as I can absolutely think of at this point on this cross. To wit, we have a big rally going back to May, all of June, all of July. So a quarter of the year was spent rallying on Euro pound. Then for the next, what are we now, July, August, September, we're not quite 3 months in yet. But what I see here is we've broken the neckline, if you like, and the neckline for me is here, and we've now come back to retest that, and I've got to call that a bear flag. That's nothing but a bear flag for me right now. And we've got a reversal bar off the monthly pivot or weekly pivot? Monthly pivot. No, it is the weekly pivot. Green's normally the monthly pivot for me. Why have I got these colors like this? Don't know. Anyway, that's neither here nor there. So I've traded this candle here as a reversal, and I put my entry underneath here by a few pips. I put my stop loss above here by a few pips. But I'm looking for a better entry. Now, when I see a bear flag like this, I'm always looking for a false break. And we've had not one, not two, but at least three. So you know what I'm going to say next. I'm going to say Three Little Indians again, because they've come out the top of the range. So there's everything I need here to go short. I don't need anything else except a setup. Now, how that comes to me, I don't really care as long as it does. So I'm just going to look at every possible scenario I can think of, and try and find an entry here. The best of them would absolutely be if price broke through the, it's the bloody monthly pivot. Okay, something going weird here. It's the monthly pivot, right? Okay, that's why it is green. Here's the weekly pivot. It's all good. I'll get sorted. So best case scenario is for price to come through here. You can see where I've got my stop loss. Maybe it hits that level. That's fine as long as I'm not in the short. Finds a little bit of resistance for whatever reason, technical or otherwise, then comes back underneath it, retests the monthly pivot and the trend line, and that would give me a superb place to trade this short. The question I'm going to ask Ash when he comes back is very, very central to whether this trade is going to be a trade or whether it even gets anywhere near the entry point. So
you can ask me now, mate, that the price is stabilized to a degree, so I don't need to do anything just yet.
Cool. Mate, the truckload of money, or lots of truckloads of money, that UK will owe Europe or the Eurozone or the EU when Brexit takes effect. What's it going to do to the pound? It's a shitload of money, yeah? Billions and billions of dollars.
Yeah, do you know, mate? I can't see the pound strengthening off the back of this. I think if we do end up leaving the EU, which is looking progressively likely where Boris Johnson is concerned, then there's already been a predicted recession, and I can't really see anything but that happening. If I'm completely honest, I think it's going to be pretty disastrous for the UK if Brexit eventually does take hold and take effect. So I think the pound is going to weaken significantly if Brexit was to unfold the way it appears to be unfolding right now. I don't know what that. I mean, I suppose the Eurozone is going to be okay. It's got its trials and tribulations of its own, isn't it?
It would seem one less when the UK goes up at the moment.
Yeah, well, absolutely. I mean, the issue that the UK is always going to have is if it tries to get back in again. And this is the problem with leaving. Is leaving on the face of it is all well and good and supposedly a fantastic idea. But it's not really going to do us any favors at all. It's going to be a very, very difficult period for the UK. Sorry, excuse me 1 minute, mate. Price is starting to weaken again, so I might need to get into this trade.
You go. All good. I'll continue on. I'll steer away from the pound for a second though, because I want to continue that conversation. It's very, very important to the way I look at things at the moment, because I am very keen on the pound long. From a technical point of view only, and I really want to get the fundamentals in my head so that I don't do anything that's going to be sacrificial or detrimental to my bank account. So what do I see on the euro? Well, no man's land, to be absolutely fair. Pardon me. We're expecting a rally, but that rally was expected to go to maybe to here for me. But instead it's gone to the top of this range. This, I call it a range. It's actually a descending channel, which has failed to be broken. I guess it has been very, very minimally by this bar here. But do I trust? Would I like to trust that to trade long? I don't think so. Have I got a good reward to risk ratio if I were to trade long now? Answer no. Can I trade short right now? Answer no. Reason, I haven't got a setup. I have a bias, but I don't have a setup. So what do we do next? We wait, as always. We just wait until one of two things happens. The first thing that needs to happen for me to get short would be a clear false break of the top of this channel, or a resistance trade line, as I call them. That would probably present there or in that vicinity. Let's call it there, actually, because there was a little mini break here and I don't like to see breaks. So we've got a clear resistance trade line here, a trade line because I trade from no other reason, and it's not a trend line as by definition. So the next thing I see is this pullback away from this area. And if that was clean, so if there was one bar here, then we pull back away, I'd actually be interested in trading this back to the pivots. But I don't like this congregation, if you like. It's not a good sign to trade in either direction for me. So no, just yet. So I'd really like to see that actually happen. I'd like to see this breakout and hit these pivots, then find its way back underneath. All three would be fantastic. So hit weekly, hit monthly, back underneath the trade line, obviously those two pivots and the daily pivot as well, then give me a candle back to them, or one or two of them would be fine. In fact, the trade line would be best. And then I've got a reason to go short. I don't have that reason right now, except a flip of a coin and gamble on it, because I think this could go either way in the near term, and the near term I'm talking about is the next hour or so. It could also, of course, sit here and do nothing until the next news event. But I'm, pardon me, I'm very much still in the bears corner, and I just need a reason to trade it short. Had I been trading at this time of day, I would have been looking for a short to the daily pivot on a small time frame, but not at this point. There was actually a nice little scenario there. I just don't trade at that time of day, so I'm never going to trade these things. You got a little double top, you got a lower high, you could have gone short to the daily pivot if you were so inclined, but no, not for me. So that's it for the euro. The other thing I see that's happening here, if you're trading smaller time frames, as this one is, and we're still thinking weekly pivot, monthly pivot, then if we get a clear look at this, we've probably got somewhat of a triple bottom semblance here, and a potential higher low at a support level. So, you know, that's also something that I would consider. I'd like to see a confluence of some kind, and I don't see that yet, but maybe a little bit later on we do. And if we get that higher low sitting here, especially at a support level, as I've just said, it might be this one, which is a strong support level. So we might get down to here. That would give me an opportunity, actually, because there's probably and I'm talking way into maybe US session at that point. So I'm getting priced down to here. And then looking maybe for a false break off that level. At least there's confluence here from which I can trade. At this point, it's one signal and that's it. I really don't have anything else to go by. So as I say, it's in no man's land right now, but if it gives me the idea that it can go to the pivots, or that it's going to give me a false break of that channel or that trade line, then happy days. I'll look to trade it short with my bias. What else do I want to have a look at? Euro Aussie I wanted to have a look at. And the reason, I guess, going through my analysis this morning, I noticed a whole lot of stuff going on. And those of you who aren't aware of how I trade basically inside ranges. And I'm looking to trade off the top to the bottom of a range, etc. Same. Looking for confluence of either pivots, trade lines, horizontal levels, whatever presents. I'm happy to trade them. Here I'm keen to go short. Why? Because we're at the top of the range. And if I get the signal that the short is on here, and that will come as a lower high potentially. Again, I'd like to see a confluence of some kind. I'll look to trade that short. I'll be taking profit if this remains untested at that level, and then I'll let this run to the bottom. I saw this morning a whole lot of opportunities like that. You'll notice a lot of rectangles and a lot of channels on my charts as we go through them. Aussie Kiwi is another, but at the moment in no man's land, we've neither hit the top nor the bottom. I guess the last port of call was the top. So if you were seeing a lower high here without it going to the bottom, then you'd be inclined to trade it short. But again, we've got the three amigos sitting bang in the middle of this range, and that is a very, very tricky proposition because the price will just want to hang around here. And if you don't find credence in that, then just go through your charts and go back. And every time you see these three pivots very, very close together, have a look and see what price is done during that day or week, and you'll find it hasn't gone too far away from them. So what am I saying? I'm not going to trade breaking out of these ranges, but if I do see setups with inside them, then happy days. That's exactly what I'm looking for. Euro yen's another. I'll be looking to trade that off the bottom to the top. Again, you can see how close the pivots are together. What's that telling us? It's telling us that price is going sideways. It's another indicator that says, okay, price is going nowhere. So why would we want to trade away from that? It will happen, of course. Price will run away from it. But timing that, you need to be pretty much a magician. Euro dollar we've spoken about. It's and you might think that's not ranging, but in my parlance and where I live my life or my trading life inside my head, that is a range. That's nothing more than a range to me. Forget horizontal levels. That's ranging between these two lines. There is no question in my mind about that. You call it what you want, channel, blah, blah, blah. I call it a range. So when I'm inside a range, I tend to stick inside that range. So again, lower high here, as I described before, gets me short. Simple geometry, really, at the end of the day, the way I trade these things. Pound US dollar was another. And again, my question to Ash, and we'll return to that conversation, was how positive can you be on pound? And against the dollar, I find that very, very difficult.
Oh, it
against
is, mate.
them.
Do you know?
Yeah,
sorry, I'm just. I've taken a nice little short, and the market's going in my favour. Okay, so it's just really. I suppose it becomes almost protective in some respects, but that's okay because and I can explain in a second why it's so good. So the shorts are in from here, and I'm looking for this area here for a bounce. So I might well clear out my short here. There's a possibility that dips just a little bit lower. Now, when we look on the daily chart, sorry, let me get a nice clean chart. When we look on this on a daily chart, the daily chart just gives us a slightly different level, and for this reason, so it might be just down here. We might be looking, but I quite like it somewhere around here. So in around about 10 pips time, I'm happy enough to take the trade off the table probably. But I'm going to wait and see, you know, what happens. If it looks like there's some price action that is where some orders sit, then I'll take that short off the table, and then I'll look for a bounce. But I'm looking for a bounce of some sort. Now, if price crashes through this level, it makes my job a lot easier. But it's coming down here now, which is really good. So the reason I quite like to do things this way is if I'm stacking up a long and a long, so if I've got two longs in the market, when I go to the downside, I make probably more money because I've doubled up my trade in some respects. That won't necessarily make complete sense, but it's effectively kind of like it's a money management thing. It's purely down to the money management. So as this trade goes against me, as long as it goes far enough,
eventually.
Yeah, as long as it goes for me eventually, exactly. And you know, if anybody understands, you know, anything about the way that market works, they do tend to. Now we've seen with the euro that hasn't been the case, so you can get caught on the wrong side of these things and be in a lot of trouble. So I don't advocate this without some experience of how you're going to manage your money. But I quite like this trade currently because I'm still looking for a bounce, mate. I'm still quite keen on the bounce. The question is, do I go in again to the upside? And I probably will. You know, I'll probably take another long because I'm enjoying the fact that we've, you know, I've missed out on a few pips. But as I've got a long in the table, it means that I go in with my normal trade plus my cover of the long, so it effectively doubles up the money. If that does make sense, I think it probably does. So so yeah, look, we're getting pretty close now. So I'm looking for a bounce from here now. So I'm just probably going to take this trade off. So if you don't mind, I'll pass it back to you while I concentrate.
Sure.
And then we'll come back to this again in a moment.
Right, Joe. Let me pick it. There we go, and there we go. Bingo. All right, so pound US dollar, as I was saying, I think everything at the moment, every single thing that I trade, this would be the hardest right now, pound US dollar. And the reason is I'm unsure of either currency or both currencies, if you like. Unsure what the dollar is likely to do in the near term. It's been in favor, as we know, in the last little bit. But that can change very, very quickly, as we know. Again, the market can do a flip flop in a heartbeat. Just look at this chart. And that's what pound US dollar can dish up right now. And for that reason, it is extremely difficult to trade it. Extremely difficult. Because where do you put your stop here right now? You know, if you favor a long and you're looking to trade off here, where are you going to put your stop? Here? Good luck with that, because we've already been to here. If you're going short, where are you going to put your stop? Here? Good luck with that as well, because we've already been long to here. And it can happen in a heartbeat. And you know, the slightest bit of banter from anywhere and anybody, Twitter, a speech, unmitigated circumstances, you know, all things at the moment are on a teeter-totter with the pound. And you know, just the slightest thing makes it move, and makes it move quickly and a long way. So, but then, of course, it snaps back, and that's the hard bit. Where do you get in? Where do you put your stop? And where do you get out? So it's a tough assignment at the moment for me on pound US dollar.
Yeah, the pound, just on that, so I'm looking for this market just to come down a little bit further, and I will re-enter for a long in around about 20 pips at a time. Sorry, just on the pound, so overnight, now Boris Johnson and the Conservative Party have got their conference going on right now, and he's got a take it or leave it deal for the EU. So let me see if I can get to that for you.
Has he released details of that?
They are due out today, I believe.
Right. Okay.
So it's an ultimatum. Did you read about this, the ultimatum?
No, but I heard whispers about that he had this. I think you were telling me yesterday that he had this deal pending within the 24-hour period.
Yes. So Boris Johnson will lay down a take it or leave it ultimatum to Brussels on Wednesday, warning he will take the UK out of the European Union without a deal if it is rejected. If the EU is willing to engage with the final offer, there will be no further negotiation, and Britain will leave without a deal in 29 days' time. The Prime Minister will spell out. Now, I think that's the significant thing. We don't really need to read on from that. So I'll just read that one more time, just so we're absorbing it. Boris Johnson will lay down a take it or leave it ultimatum to Brussels on Wednesday, warning he will take the UK out of the European Union without a deal if it is rejected. If the EU is unwilling to engage with the final offer, there will be no further negotiation, and Britain will leave without a deal in 29 days' time on the 31st of October. Now, what people are saying is because the European Research Group, the ERG, is pretty much pulling the strings with Boris Johnson, along with Dominic Cummings. They are hardline Eurosceptics. So what people are saying is that what Boris Johnson is doing is saying, if there's no deal, it's your fault. So he's trying to lay the blame firmly in the lap of the European Union, which I find quite fascinating, really, because what he's trying to do is circumnavigate the fact that law says if he doesn't have a deal, then he has to go back and ask for an extension. So the way that he is going to get around the law is by saying, there's the deal, they rejected it. We haven't rejected it, we've given a deal. They have rejected it. So because they have rejected it, that means that the law no longer holds water. So
I think that's a lot of BS, to be fair.
Oh, mate, unbelievably so.
Because how many times have Britain rejected the Euro's offer? Hello.
Well, the Europeans haven't really given an offer because their stance was always tell us what you want. Well, no, actually, you're right. No, you're right. They did, didn't they? They did come out and say, yeah, the backstop was theirs, wasn't it? Yeah, and you're right. It has been rejected. But you're absolutely right. But you see, this is the thing. Everybody knows it's BS. But that's the way that he knows that, as I say, he can circumnavigate the law. He knows he can get around the law by effectively blaming the EU.
That's the BS part. He can't get around the law because the UK Parliament have already rejected offers. So that won't hold any. I'm no lawyer, but that's not going to hold any water at all in court. I wouldn't have thought.
No, well,
anything, and if he didn't have a set before, it sounds like he's grown a set of kahunas.
Yeah, no, he's always had a set. I have to say, that it's always been well, and he's either got a set of kahunas or genuinely he just doesn't care. He just wants to take us out of the EU, which is what the ERG, as I say, are quite happy to do. They're quite happy for Brexit, a clean break Brexit, which I suppose you could argue that's what the vote was. The vote was to take us out the European Union, meaning the customs union, the single market, and everything else that goes along with it. So Brexit, Brexit by name only is by negotiating aspects of remaining in the EU. So I suppose that that's where we currently sit really right now is that we are looking for a clean break. And a clean break,
Aren't we all?
everybody, yeah, well, everybody knows that is the worst possible scenario. And that really will be bad for the pound. I don't think you're going to find many commentators that would support the no deal Brexit being positive in pretty much any stretch of the imagination. So
yeah, I think that's why I'm so interested. I love being against the tide. It's just wonderful if you can get it right. But I mean, that's why we're seeing stuff like this. There is very, 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 very much a market.
Oh gosh, yeah.
We're in very uncertain times.
We are in uncertain times, and it makes it tricky to play, doesn't it? I don't know what we do. I'm not sure. So you're looking for a long, I presume.
Mate, I'm always looking for a long technically because it's so downtrodden and oversold. It's kind of had a bit of a rally out of that zone, but absolutely. And by the way, I didn't talk about the trade that we didn't take it in this show yesterday, but I think I did tell you how I'd managed this yesterday, and then I had moved my stop to this is pound Kiwi long, right?
Yeah.
The strongest currency versus the weakest currency. And that's telling me something today, because if the strongest currency can't outshine the weakest currency, then the strongest currency isn't going to stay strong for long. I don't think, certainly in the short term. But anyway, I'm out of that trade now, by the way. At break, maybe I was yesterday at this time. I can't remember how I broadcast that. But anyway.
I mean, what it does mean is that by the end of the week, we should have a little bit more certainty, I suppose, on what's going to happen, because or by the end of the day, even, I'm not sure when the Tory conference ends, but by the end of the day, we should know, what exactly it is that the UK is passing over to the EU, and what exactly is going to be their response.
Well, we'd hope so. At least that's something. But gee whiz, what is it? 29 days to go. I've just got my fingers crossed that it is all over at that point.
In 29 days.
So we can get to some form of normality. It'd be just amazing. Because the pound used to be a great currency to trade. It's really volatile and exciting, giving you opportunities quite often. It's certainly volatile, but volatile in the wrong way. It's all over the place, like my old mad woman's breakfast, as I say.
Yeah.
So Euro pound's the trade that I'm interested in, and that's why I was very keen to understand where we sit in pound terms. Technically, this is as good as it gets for me. This is a really strong setup. In terms of the daily chart, it's not yet a setup anywhere else for me, and that's why I've got it's probably a FOMO trade that I've got. I don't really like the trade because it's 100 pip risk almost into a 40 pip reward in the first instance. That 40 pips becomes 330 odd very quickly, though, if it gets through here, in my humble opinion. And then what? Who knows? But a lot, and in fact, not even a lot, everything depends on what the market thinks of how Brexit actually unfolds.
Yeah, do you know,
And
the other thing about what you're just saying about the dollar? I mean, we saw a reaction yesterday because of the awful manufacturing numbers from the United States,
yeah,
and
weren't good,
you
were
know,
they?
when they were terrible. I mean, supposedly, the worst numbers that we've seen since the trough of the financial crisis. In manufacturing. Now, there are commentators saying that manufacturing isn't a big deal to the United States market, so nothing really to see here. But there are
But Donald wants it to be a big deal. That's part of his whole thing. It's all
yeah,
about investment in infrastructure and manufacturing.
yeah.
So if that's not going well, then Donald won't be happy.
No, he won't be happy. You're absolutely right. And also, I think on that, does it then kind of point to the Fed, loosening policy again? So it could end up being that's obviously why people are selling off the dollar. And we've been waiting for this, haven't we? I said to you yesterday, are we likely to get a huge pop on the euro? And that did happen, and it's
Yep.
and maybe the pound gets kind of like carried along and swept along with that. And if that's the case, if the pound does end up being fairly positive, having some sort of positive negotiation, then it's going to be a great trade against the dollar if the dollar is to weaken significantly, which it's due to do. We saw a big pop in gold as well yesterday, stabilized a little bit, but then it's starting to strengthen again. I noticed this morning. So the pound could well be a decent trade against the dollar, depending on what else comes. Manufacturing has been a significant signal, and it's been pretty bad. But we do need to see some of the other data points, because if commentators are right and the manufacturing isn't such a big deal, then it's going to come down to NFP being bad. It's going to come down to other employment factors being bad. It's going to come down to CPI, and just a catalogue of things is the next thing. The trade war is obviously starting to bite. Does that mean now that we get further escalation in that, or will that start to potentially calm down as well? I mean, it's a very strange period that we're going through. We see China celebrating, was it 70 years of communism? I can't remember the exact number.
Yeah, I can't remember the exact number either, but yeah.
So they're celebrating that, they've got their big celebrations going on while people are rioting in Hong Kong. So there's some disharmony and unease right across the board, and I suppose the market has been twitchy. So is this reaction that we've seen in the dollar and in the stock market, is it a bit of an overreaction because it is the first day of the last quarter, the first day of the month, the fact that we've been fairly solid, but there's been some disquiet kind of throughout the filtering through and whispering throughout the market, and just waiting for some sort of catalyst? But I'm not saying by any stretch that that manufacturing isn't important, but I think the fact that the number was so poor was the reason that we saw the sell-off that we did. But will it ultimately kind of calm down, because it was, it's just like everybody's just kind of going, like just literally just running from the building shouting fire, when actually the cooks just turned up the gas ring a little bit too high.
Yeah, look, all of those ingredients say to me that we should be in a risk-off situation.
Yeah.
Yet we switch from risk off, or seemingly switch from risk off to risk on a daily basis. Now, this is the gold chart, the daily gold chart, right? And I think I said this, when did we talk about gold? I can't remember. But I said this at the same time as I was looking at, was it the pound dollar? Probably was, yeah. And I was talking about Three Little Indians, right? And that we would go into a fall here. We break this to the short side. Gold was exactly the same at exactly the same time. And three little Indians here for me. Those of you who don't know what I'm talking about, I talk about a range false break out of ranges, and there's three of them in a row. When I see that, I think that the range will break to the short side. It may not go forever, and certainly we'll get a retest, but that's exactly what's happened here. We've got, and I don't trade gold, never traded gold in my life, I've got to say. But that to me looks very, very bearish. Way too late for me to get into that move, of course. So I'm seeing, and I know we've had a rally, but is that the strongest signal on the chart? Not for mine. This double top followed by a lower high is the strongest signal on the chart. Or if you like, throw in left shoulder, head, right shoulder, neckline, break and retest. That's extremely bearish for me. In fact, I might, for the first time in my life, trade gold. Actually, I think that's a short.
Oh, yeah?
Yeah. That's a short setup if I've ever seen
one. With gold?
Yes.
So, but yeah, no, you're absolutely right, mate. But yeah, the test of that that neckline, I completely agree. So here comes the quandary, and here comes the conundrum. If we are risk off, how can we then go to gold and trade it short?
How can you go short? Exactly.
With a setup like that, you're absolutely right. You've got this amazing setup on a chart, and yet the rest of the market doesn't allow for us to do what the technicals are telling us. You know, so this is where trading, I think, patience comes into play, because surely what we're really waiting for is for further bad news. What we're really waiting for is a calm down with everything, and for the market to have a little bit of a pop, and gold to actually come down to the downside, hit its measured move, and then start to reverse again. But it suggests, the gold chart suggests that there's just a little bit more upside to come in the stock market.
Okay, where in the stock market, right?
And you know, and the dollar as well. You know, that it also suggests that there's some more upside to come with the dollar. If gold is moving to the downside, it would suggest that the dollar has got just a little bit more upside.
It would. FOMC is not till the end of the month, is it?
No, it's not, and that could be key, because obviously everybody's going to be looking at the FOMC now. I mean, it's only one number. Manufacturing is just one number, but if we get a catalogue of those numbers, everybody's going to be looking at FOMC certainly to be cutting the rates. So maybe we strengthen a little bit of dollar into that move, and then it starts to turn around halfway through the month.
I would think, and I generally look to 2 weeks out before the market starts to price that in, but it can happen any time. So yeah, that's what makes it hard, you know. That's why I think the dollar is really tricky to trade against at the moment, and sorry, pound dollar is really tricky to trade against at the moment.
Yeah,
it's not the more.
Yeah.
They've both got massive question marks over both, you know, over them. So
so what do we do with that? I mean, does that mean we just avoid pound dollar crosses? So we look at things like euro yen and CAD Swiss and things like that, you know, or do we play what we know will have some volatility, because at least we'll get some movement?
I think so. I'm still willing to trade the pound, as per this morning. I've got a short in place at the moment, on a very bigger time frame. I'd much prefer to be in a better position to take a short, and this may even present that. I don't know. We've got to trade into pivots here. That's the problem. The best case scenario, as I said before, was a false break of this area. So I'm more than willing to trade anything that's not pound US dollar at the moment, because I think there are clear pictures on things like the Kiwi, which is in trouble. So, you know, if you get a rally on the Kiwi, then I think you need to be trading that short. I think the same for the Aussie. The yen's a bit of a question mark, because are we risk on, are we risk off? I don't know. So I'm happy to trade, you know, the Kiwi and the Aussie against the pound, yen to a certain degree. They're probably the ones that I would choose. And euro pound, as you know, because I think euro's got a story, and I'm very bearish the euro. So I'm happy to trade euro pound.
Yeah.
All of that said, I think there are probably better opportunities, less risk opportunities by trading the miners, if you like, or the minor majors. Let's call it that. Like the Aussie against the Kiwi, like even the CAD. Throw the CAD in. You could trade the CAD. Look at oil. Oil's come off big time after that scare that we had a couple of weeks ago. That's at it's probably got through the first level of support. There's probably a little bit further to go with the oil chart. Maybe that's a rally candle. I don't know, but to my mind, there are a lot clearer pictures available to us. And certainly if I go to things like Euro Aussie, as I said, which is ranging, if I can trade that. Aussie Kiwi I can trade because it's in a range. Euro Yen I can trade because it's in a range. They're the sort of things that I'm looking for, just to continue the method in which I trade. So if I steer clear, and the reason I've been so interested in the pound lately is because if the market does get a taste for the pound, it's going to go a long way. But Brexit is the absolute weight on its shoulders, and that really does need to be resolved.
Timing has been difficult, isn't it, mate? And this is the
Very
thing. I think everybody's tried to get into the pound because they don't want to miss the pop.
That's right. It's FOM.
Yes, it is.
Missing out.
It is. It's the FOMO effect, but you know, while that's all been going on, everybody's probably been losing a lot of money when they keep getting stopped out of trade. So it hasn't worked.
Okay. I haven't had a problem.
You haven't? No, but your approach is probably a lot more
conservative.
Yeah, it probably is a bit more conservative, but also because you've managed to kind of get into some short-term /long-term trades on that, it means that you're protected a lot earlier. Whereas I think a lot of other people probably are trying to hit the home run.
Just rolling the dice, yeah.
Yeah, and it just isn't the way to play it. I mean, they probably needed to come and trade the slingshot with Jeff to figure out how to trade the pound, because eventually, I suppose one of them will break, and you'll be on top of that. You'll be on board with it, and still be protected, or But until that moment happens, then at least you can remain flat, or get little bits and pieces of money out of it. But
yeah, I missed time one on Monday, but that's really the first little casualty that I've had trading it in the last couple of months. So
yeah,
no big deal.
It is tricky, and I think a lot of people are probably getting quite burnt just because they're trying to pick the bottom.
Yeah, well, absolutely, I agree with that, and that's not the way to go. You still need to have those technicals in front of you that say, okay, we've got a reason to trade long, or we've got a reason to trade short. We're not just thinking, okay, this is a double bottom. This has got to be the lowest point this is ever going.
Yeah.
Yeah, right.
Well, this is the thing as well with the pound, is that all the way through I've assumed that common sense would eventually prevail, but it really doesn't appear to be turning out that way. It appears now that we've got these hardliners in power who are quite happy to crash the UK out. Now, I don't really get it. Now, there's one or two reasons they're doing it. One, because they genuinely believe it's going to be milk and honey for the country, or two, they don't care because they're protected enough for it not to matter, so they can just kind of go along with the rhetoric of it being that was what the people voted for. And this is where I do have some sympathy with the Remainers, remaining parties, is that they know, they can see quite a way out how damaging it's going to be. So regardless of the fact that the people voted for something, and it is democracy, they kind of they're just thinking, yeah, but hold on, do we really think it's responsible now to give you what you want? It was almost like when you say to your child, You know, if you yeah, you can do that if you want, but if you fall, it'd be your own problem. And they continue to climb high and high and high, and you just leave them, and then eventually they fall and break their arm.
You only do that a few times if you're sensible.
Yeah. Well, yeah,
I did it a few times, I've got to tell you, in many aspects of my life, but I got through that phase years ago.
Yeah.
And that's why I'm now a far more conservative person and trader than I ever was before. Otherwise, I'm probably in that boat. I'm probably in that boat saying, oh, this can't go any lower. I'm in. Let's go.
Yeah.
Speaking of which you know, I now see a double bottom and a higher low sitting here and the weekly pivot dead ahead, and I'm thinking, and that's why I just put this trend line on my chart to see if there was a false break potential here, but there's not.
Yeah, I have to say I was looking at the pound as well.
That's there right now.
There is, isn't there? There is something long with the pound. It looks at this stage anyway. Yesterday's bar didn't fill me with the confidence I needed to want to trade this, because it was that's that kind of spinning top. It just it makes it tricky, doesn't it? It shows that there is positions going on in both ways in an area where there's a hold. So this is certainly a bounce and a buy zone. But at this stage, I don't think that the charts and the bars have expressed that the rest of the market is ready to go.
Might be, you know, the trade that I often used to take, and I'm not advocating that this is the way to go right now, but that line there and that line there could well be long. Short could well be long short.
Yeah, it could. It could.
An OCO there. That's, you know, I buggered that up. I meant to do that on the, well, I didn't mean to do that on the Aussie. I often do that on the Aussie. It would have worked out beautifully because we had a very tight range in there that we could have played. We had the monthly pivot, so stop loss here above these highs, stop loss here below these lows. Your risk would have been, and price was in exactly the right spot, was dead set in the middle of the range. 27, your overall risk would have been 45, not even 50 pips to play that breakout. And you'd so far be about 80 odd pips to the good. Missed that one. That's one of my favorite plays, as you know. Never mind.
Never mind, you get another one, mate.
Not in front of the charts long enough at the moment. That's my biggest problem. Too
yeah. Well, it's you kind of need to be at this stage, I think, as well. You know, considering what we've got going on.
There's a lot to look at.
Yes, lots to look at. Yeah. Okay, mate. Well, I guess we'll wrap it up there. I'm still looking for the downside with the FTSE. I think there's still a little bit of fleshing out to do. I think maybe another 10, maybe 15 pips to the downside, and then we can look for maybe to add to another long. But I'm liking the way that this is turning out right now. It looks like it's going to plan. That there was a potential for a bounce from here, because we are about to close a 4-hour candle, and you do sort of like tend to. Oh, sorry. You tend to sort of see that there could be just a little bit of movement. You know, when we finish up a time frame, a large time frame. So it looked like initially that we could start to see a little bit of a bounce to the upside, just to try and get back. Now I'll show you this on a 4-hour chart here. So trying to get back really into this level before that 4-hour bar closed. But that hope looks like it's been swept away. I mean, it's got 7 minutes to do it, which it could do. You know, the bulls may well come in and surge this to the upside, but they've got quite a lot to do. 40 pips. When you think that the average true range at some points of the year is 60 pips, they've got to make up 40 pips in a 7-minute period. It seems pretty unlikely to me. So that pop to the upside doesn't look like it is coming right now. So any movement back up again will probably see us move further down. But I think we can aim down here now before looking for the long, which actually is about 32 pips. I was thinking it's a little bit less than that, but yeah, around about 32 pips to the downside, and then we can look for the long again. So keep looking for the shorts, and when it comes down here, let's look for a bounce.
Mate, there should be a lot of people smiling in the room. They've been in the room for the last 2 weeks, so keep it up. Great stuff.
Yeah, brilliant. Yeah. Well, absolutely. I think if people have been trading the FTSE with us and some of the Euro trades that we've been taking, well, that you've been taking as well, then they will be well in the money for free too.
Should be, mate. Sorry?
For free too. Can't be bad, can it?
Goodness me, how do we do it?
Okay, well, let's wrap it up, mate, and we'll be back same trade time, same trade channel tomorrow, and we'll do it all again.
All right, mate. What time is that?
It's going to be 5 to 8.
5 to 8. That's a date. Don't be late, guys. See you tomorrow.
See you tomorrow, guys. Thanks, Jeff. See you tomorrow, buddy.
See you, mate.